The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 24th terrific Tuesday edition of the Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call the 4 ifs in life. You know, there are 4 ifs in the area of growth and change that make life worthwhile. The first if is life is worthwhile if you learn. You know, this Friday at my Master Trader Workshop, it's going to be all about learning. I cannot wait to share with the folks that attend all the tools and trading strategies that will change traders' lives. That's right. This workshop will absolutely change traders' lives. That's what makes my life worthwhile, because of the opportunity to be able to share. You know, if you share things once, well, then you only get to hear it one time. If you share things 10 times, then it really starts to set in out there. The second if in life, life is worthwhile if you try. You know, you've got to take what you've learned and see if you can try it. You've got to be able to do it on your own. This workshop that I'm teaching, it's all about teaching people to fish. This is not a workshop to get you to go ahead and continue to subscribe to services on a continuous, ongoing basis. This is about being able to set you free so that my services are no longer needed. I want to be able to teach you how to go out there and create financial freedom on your own. The third if in life, life is worthwhile if you stay. I believe that staying is absolutely critical. You know, you don't have to stay forever. You just have to stay long enough to be able to see it through. This is all about discipline. And discipline, in my opinion, is knowing the expectancy of your trading system. That will free you. I've talked to so many folks that are so concerned about their ability, their trading, their focus is on the psychological, which is very important, folks. You know, when I started this show, I guess maybe 2.5 years ago, whenever I started doing some radio shows with Tom, as you know, my opening is really about I guess is influencing people. It's more than just inspiring. I don't necessarily, inspiration lasts for, I don't know, maybe about that long. Really, my outcome is really always to be able to influence people, to be able to take action out there. And you've heard that I'm sure that you've heard this, you may have even heard it from myself, you know, yeah, what have you heard from me? That the biggest disappointments in life are unfulfilled expectations, right? Well, when it comes to trading, what you really need to know, the key is to determine whether or not you have a mental issue, a psychological issue, a fear issue. I don't know what the proper terminology is out there, but if you do not know the expectancy of your trading system, how is it that you can actually place a trade? How is it that you can place a trade? I mean, that is because what you should have an expectancy about is your trading system. Not that the next trade is going to work, but that over a series of trades, because you're going to run this like a business. And that third if in life, that's all about being able to stay the course. It's all about money management. Certainly, that's an important aspect. If it's not a part of your trading, it should be, and you need to find a way in order to make that happen. The fourth if in life, life is worthwhile if you care. And caring, I think that's one of the most unique human experiences. I care about each of you. We are all part of the TFNN family, and family comes first. Caring is absolutely vital. How about that? It's absolutely vital. It's powerful. That's powerful and vital. If you combine those two words, it's vital. But it's absolutely vital. It's powerful, and it's all-encompassing, folks. And it really is far-reaching. So what I've learned is that if you care enough, you can get magnificent results. So to lead a life worth living, I think that what you've got to do is you've got to learn, you've got to try, you've got to stay, and you have got to care. Remember the 4 ifs in life, folks, and you will be on your way to building a life of abundance. Let's go check out the abundance in the marketplace here right now. Dow futures are up 24 points, trading out at 15,350. S&P futures up 2 1/4, trade at 16.95. Nasdaq futures up 10. Russell 2000 up a point and a half. King dollar up about 15 ticks. We'll look at the currency market, the hard currency market. Goldilocks back $16 right now, trading out at 13.10. Hi-ho silver down 38 pennies out at 21.47. Light sweet crude back 60 cents at that 102.98 level. You know, in that 102-ish range, we'll see if light sweet crude is going to bust out of it, out of the consolidation that's been in really since July 5th. So what's that make it? Almost July, August, September, almost 3 months out there. So we'll see if light sweet crude is going to bust out or if it's just coming into an area of support out there. We take a quick peek around the globe. Let's go see what's going on over in Europa. We've got the DAX is up 30 points. That's up about 0.3%. The FTSE up 24 points. That's up almost 0.4%. Over in Asia last night, a clear bloodbath. We had the Nikkei down. Well, Nikkei was flat, so not so much of a bloodbath there. That was just a little paper cut. That was down about 10 points. Down to 0.8% last night was the Hang Seng. That was trading off 192, and the Shanghai off 0.6%, down $14. Our call-in number is 877-927-6648. If you give me a call, I would be happy to take a look at your stock chart. Let's start off by taking a look at the petro in the marketplace. That's going to be this Euro-Japanese yen currency pair, making some absolutely beautiful patterns out here. You know, if trading currencies, if trading anything scares you, if there's some fear, it's just simply because nobody's really shared with you that it doesn't matter if you trade chart patterns out here. It doesn't really matter what is really behind, what chart it is that we're looking at out here. You do not need to fear anything other than what's the unknown. And I can teach you, I can link the known to the unknown out there. That's an easy thing. If we take a look here at this Euro-Japanese yen currency pair chart, take a look at all these beautiful patterns, these 1.618 butterflies, 1.272 butterflies, each of them forming, giving us nice reversal signals. We've got a 0.618 Gartley sell pattern. Now, what is forming inside the Euro-Japanese yen is a 1.618 butterfly sell pattern. Has it completed? No, it has not completed. And if you take a look at this nice wide-ranging bar, courtesy of Uncle Ben, out here, this is on September the 19th. I think that, was that, Wednesday, Friday. No, that was I guess that was really, that was not courtesy of Uncle Ben, or maybe it was kind of a delayed reaction out there. But what we can see is you've got this nice wide-ranging bar, and all the prices have been doing here is just simply retracing. It's still traveling inside this wide-ranging bar. Markets do not end on wide-ranging bars like that. It wants to move up and complete the pattern, move into that 135 level. So if we take a look at the markets here, the markets have been pulling back, and they're absolutely pulling back to what I'll call a precipice. Whether that's going to actually complete and form today, meaning you're going to look out, you're going to get right to the edge, and then the rubber band shoots up to the upside. We get to see the A to B equals CD patterns that were confirmed last Wednesday. We get to see those complete. And the real fuel of the market, and the reason why I say fuel is because if we go let me go find another chart out here that maps out the Euro-Japanese yen along with the along with the S&P 500. I think that's under this tab labeled GE out here because of a number of divergences. There's a divergence right there. That's the Dow Industrials and the Dow, but I'm not going to get into that one. We're going to see if we can find out here where is on my chart the Euro Yen. It's probably right there. It is right smack dab in front of me out here. This is really a key chart. The top of the chart out here, folks, that you're looking at is the S&P 500. So it's a cash index. Obviously, it's not started trading here just yet. The bottom of the chart, that is the Euro-Japanese yen. Look at the correlation with regard to direction of movement. And the cool thing about this is that when you see a divergence, the winner is going to be the currency pair out here. Well, when there's no divergence, they're doing the nice little tango, the nice dance step out here, and the next step up. That's why we want to be paying attention. See, a lot of folks are just really focused on, if we go take a look at the S&P 500, let's go do that. Let me see if I can find that chart here rather quickly. Most people are just focused on inside the Dow or the S&P 500, that price has come all the way back. It's taken back all of the gains from Uncle Ben out there. Now, is that important? It's important if you did not understand where the fuel in the market comes from, which is from the currency pairs out there. And you want to be able to go ahead and pay attention to those things. It's like driving a car. You get in there, you turn the keys, and all you're going to do is pay attention to your gauge that says whether you're out of fuel or not. You need to know where those gas stations are to determine when it is that you're going to pull over and put some more fuel in it. And then you got to decide whether you want the old premium, the regular, or whatever that middle brand is out there. Well, the premium brand, that is the euro, Japanese yen when you take a look at currency pairs out there. And as we were taking a look at that, you can see that hasn't broken through that wide-ranging bar. If that were to change, if that were to happen, then I'd say, okay, we've got a different story out there in the marketplace. So all that I see really taking place right now, all this fear, that's up in Washington, D.C., all we got to do is really just trade the chart patterns out here. And at the moment, looks like all we're going to do is go bump up against that little fear-ish area. And speaking of fear gauges, we do need to be paying attention, though, to that VIX, because that VIX, very close to getting above that 50-day exponential moving average. It tested it yesterday. It tried to get above it. It doesn't have much further to go out there. If it does get above that 50-day, which, by the way, is $14.54, it closed at $14.31. My guess is it's going to bump into it, maybe get above that area, maybe scare us because we're almost done with September here. We'll be coming into the ghouls and the goblins of Halloween out there. But nonetheless, we still need to be paying attention to the VIX index out there. 877-927-6648. Oh, it's good to be here with you. We'll be right back.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely is, folks. Let's take a look at some of the pre-movers here in the market. Apple lead the charge dollar-wise to the upside. They closed at $490.64 yesterday. Last trade just fired off at $495. Facebook, that closed at $47.19. Their last trade fired off at $48.60. Applied Materials, AMAT is a ticker symbol. They closed at $15.99. They're having a nice move this morning. They're up at $17 and no, I got the wrong place. $15.99. Yeah, $17.31 is where they are at. National Oil Varco, NOV, just moved into second place dollar-wise. They closed at $78.50. They're trading out right now at $80.20. On the downside here, Red Hat. Red Hat. This is one of the reasons that I actually got into technical trading. How apropos that Red Hat shows up on my screen. They closed at $52.93. They're trading at $47.82 out there. I think it was back in the 2006 timeframe or so. I think they were still in the, I think it was still a ticker symbol RHT. It was one of those stocks that had fallen out of bed. You know, that's really what got me into technical trading was because I used to just be a fundamentalist out there. Then I learned the hard way. Well, you know, a stock that was doing so well was generating all kinds of great sales, and all of a sudden overnight can be cut in half. You know, and the first time that happens, you just kind of chalk it up to maybe a bad experience out there or what have you. But when that happens several times, then you start saying to yourself, what could I have done? You know, that's really the important thing. You know, you write down these 5 things. Grab a pad of paper. Write down these 5 things, because if you write down these, you know, questions control our focus out here. So write down these questions. Maybe throughout the day, I'll come back in. But if you need to solve a problem, or look, the most important thing that you can ever learn to do, whether it's in trading or anything in life, is to go with what gets thrown at you. You know, it's like we were talking about, yesterday we were talking about the America's Cup, or Tom and I were out there. Look, we can't control the wind. Wind is circumstances. What you can control is being able to set the sail. Circumstances are going to be tossed at us. We can't control those. What we can do is we can set the sail. And so when you get a bad set of circumstances that are thrown at you, the very first question that you have to ask after those ants come in there, and I'm not talking the ants that I talked about yesterday. I'm talking about the negative ants, automatic negative thoughts. Once those come in and you can flush those out, remember, look up to the sky, you'll get rid of those ants pretty quickly out there. The very first question that you must ask is, what's great about this? Because even in a bad set of circumstances, there is going to be something great that will come from it. In the case of Red Hat, what was great about Red Hat, and then a few other equities there that just simply took it in the shorts, was that I decided that I was not willing to, that I knew that the trading system I had wasn't perfect yet. Now, I don't strive for perfection. It certainly wasn't extraordinary. And that's the second question that you need to write down. What's not perfect yet? I won't use that word perfect too often, but it presupposes that there is perfection out there. So the first question, what's great about this when you get a bad set of circumstances? Number two, you must write down what's not perfect yet, because it presupposes that perfection is out there. And that's what I did. That's what actually led me to Tom. It's how I ended up being here, if you will, today. Then that number three, the question that you've got to write down is, what are you willing to do to make it the way that you want to? You see, if you take a look at that whole progression of how I ended up, where it is that I'm here, it's going through these 5 questions. This will work for every gosh darn thing in life. And here, folks, you also have to write things down. If you do this in your head out there, you're just going to get all jumbled. Mush. It doesn't work. So make sure you write down number 3, and that is, what are you willing to do to make it the way that you want it? Again, it presupposes that you can do that, and that is very powerful. Like number 4, the question that you want is, what are you willing not to do? And that's also, you've got to be able to differentiate. You know, you're not willing to do certain things because you want to make something the way that you want it. That's what's led me here. And number 5 is really, and this is important, is how can I enjoy the process along the way? Because, folks, the process along the way, it's going to be arduous at times. There's going to be points in time where you're going to be confused. Confusion is good. Confusion means you're just about to learn something out there. And the real must here, before you do all those 5 things, you must come from a great state. And a great state, we talked about this yesterday. First, it's about your physiology. So if you're in a bad state when those circumstances get thrown at you, change that physiology. You know, stand up, put your shoulders back, take a walk, look up to the blue skies. Today, you don't see too many blue skies in Clearwater, but we could paint a blue sky if we needed to. You've got to change your state, and always feed your mind. That's the key. You want it because it's all about growth and contribution. You want to make sure that you are feeding your mind. So come from a good state, feed your mind, folks, and you'll be able to solve any problem out there. Problems are nothing more than unanswered questions. I just gave you the 5 key questions, folks. That is the fountain of youth out there. That is how you will solve every problem in life, I promise you. 877-927-6648. We have the Dow, which has been the weakest, has only made a 0.382 retracement. Something to think about. We'll be right back, folks.
It's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races, but nobody's out of the gates. You got the Dow up 5 points. S&P is down 83 cents. Composite up 4. Russell 2000 down 7 points. Apple up about $2 right now. Trade out of 492 and change. Microsoft down 23 cents. Google up $3. Google got hit pretty hard yesterday. Cisco's off 29 cents. Intel down a penny. Netflix leading the charge now to the upside, up $2 and change. Greenway Medical, GWAY, they're up $3 now. Apple up a couple of bucks. Facebook up was up $1 or so, $1.31. CarMax up $1.10 to the downside. Red Hat off $5. That's down 10%. We'll take a look at that chart. Tesla Motors is off about $1.67. No big deal out there. F5 Networks off a couple of bucks. That's about 2.5%, down 5%. Carnival Corp, CCL is the ticker symbol out there. Let's go out to our caller out here, John in Quincy, Massachusetts. John, thanks for calling. Thanks for holding. How are you today?
I'm fine. How are you?
Excellent. Thanks so much for asking. You wanted to look at the GLD, the ETF for gold. Tell me what you're doing, how I can help you.
Well, I'm in it at about 130, 150, and I'm wondering if it's just going to test like last week's low and bounce up, or if it's going to go lower.
Well, what we take a look at is we're looking at the daily chart here for the GLD, and so you got it at about 131, and was that based on maybe a retracement level or something where you entered? What were you looking at? It
was based on when the Fed said they weren't going to taper.
Okay, so when they said they weren't going to taper, you jumped on board that trade.
Yeah.
Okay, great. So now the key here with regard to the candle that you're looking at, and it certainly is the right candle in the right spot, is going to be the low of that specific day, which was on September 18th. And the low there is 125.15. Now, that's a very strong bullish engulfing candle. And theoretically, that should act as a very good support area. So what you would want to do, because, the GLD is going to be trading based on what's going on inside the gold contract. So you're inside this, which you've got, in essence, trading for 6.5 hours, not including, external hours out there versus the gold contract that's trading for about 23.5 hours. So as we take a look at this here, you still want to do your correlations based on what's going on underneath the gold contract. But what I can say, John, is that if it were to close below, is your stop below 125.15, or
Yeah, that's what I'm going to put a stop on.
Yeah. So if it closes below 125.15, that's not good news. It's not good news. One, from the presupposition that because the Fed was going to continue with monetary easing, that price is below that. But more important is that you're getting below a very important bullish area, and then that would set up inside the GLD. It's possible that if it breaks out that area, that it actually could. Your next area to take a look at a possible buy on the GLD, then, if it breaks through there, is probably in the 117.31 area, 117 to 120. But you want to wait until you see some type of reversal signal out there. If I take a look at the actual, does that help? Does that help confirm what you were thinking?
Well, it helps me put my stop in, right?
Yeah. So that's what I would do, because that's where the bulls really should be hanging out. And if we take a look at the gold contract, one of the concerns inside the gold contract here, that from my standpoint, is when gold came off of the bottom, was in a really nice rising price channel, real nice angle up there, and price held through that area, and I was looking for that price channel to continue to hold, but it broke through there on September the 12th. Now, on the day that the Fed released the minutes, what price actually did, and John, don't ask me how this works, I just know that it does work. And I'd ask you, how does it work? Price went all the way up to try to get back inside the price channel, and it was repelled right there. It stopped right there. How does it know to stop right there? I can't figure that out. And then that very next trading session where you had that little doji candle, couldn't get back inside there, and now we've seen it back off. And that's a nice little morning star reversal pattern that's out there. So that's very strong. So in the gold contract, it's the 1291.50. That should be good support. But if it breaks through there, that's when you'll probably see gold come all the way back down to test the lows of the June 28th session. Inside gold, you're probably somewhere around 1234 to 1179. But as long as you keep a stop in place, and it's just a trade and you haven't overextended yourself, then you're in good shape.
Okay, thanks a lot, Steve.
Hey, thanks so much for calling. I appreciate it. Let's go to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding. How are you this morning?
Okay, fine, thank you.
Excellent. You go ahead. You wanted to, or is it natural gas that you wanted to take a look at?
Yeah, where the possible buy may be.
Okay, so let's go take a look at the natural gas contract here, and it's kind of shifted here to the downside over the past couple of trading sessions, and it really has. It's back below, and it really never got above the resistance area of this little evening star. I was talking with John about a morning star pattern inside gold, and inside natural gas, Lou, we're taking a look at the top, the resistance level of that pattern, and that happens to be this 3 candle session, September 3rd, September 4th, and September the 5th out there. Now, price closed just slightly above it, but not with any kind of conviction. I mean, intraday, the emotion of it went back and it tested a resistance area, but now it's back below that lower part of the range. And as far as where this could pull back to, right now today you're bumping up against the 0.382 retracement level, about 359. I would say the better buy on this is going to be a retracement down into about the 339-ish level, but it will be when you see the next bullish candle set up as well. And inside natural gas, as far as resistance or support, I should say, support should be the candle session from September 6th, if you're taking a look at the contract, the continuous contract at least. And the low of that session, Lou, is $3.51. And so if natural gas closes below that, that happens to be a bull sash candle. If and you've got a swing point there. So if the bulls aren't there to defend that position, then you're looking at that 339, maybe even 327. But 339 is most likely the area out there. Now, what I will also tell you, as far as a bullish momentum trade, if in fact the support level holds, and tomorrow, that's at least the parameters I'm using right now, tomorrow you see it close above today's high, which is $3.62, then you've got a momentum move to the upside. So that's how you've got to take a look at both sides of the trade out there. And right now, I think you have to wait for additional information.
Okay, that sounds great. Thank you, Steve.
Hey, my pleasure. Thanks so much for calling. So right now we've got the Dow is off 17 points. Let's go check in. So we took a look at Goldilocks. Let's go take and natural gas. Let's go take a look at light sweet crude and then silver out there. As we take a look at silver. We take a look at light sweet crude. Let's blow this up. And what we can see here, trading out right now at about 102.60. And the area of this has been trading in this yellow box that I've got over here. This has really been a sideways consolidation move ever since July 5th. And so price is coming back up into that area, which is right around the low of the consolidation pattern, I would have to say, is 102.22. So we're about 40 cents away from there. If you see it close below 102.22, the only little risky thing here is you're starting to get into the oversold territory, but you're not completely down there. And what should happen, if in fact you see light sweet crude close below that, that will set up longer-term prices wanting to get down to about the 95 area, because this has been a 7-point consolidation. Now, what I expect would happen, let's just say that light sweet crude continues to back off. Where it's going to really run into some support, though, this is above the $95 area. Number one, you've got the 200-day exponential moving average, which is at a price level of 99.23. But not so much that. It's just simply, if you take a look at the two black lines going across my screen, that is a much longer-term consolidation level. And the thing that had bothered me the most about light sweet crude, we took a look at gold with John, and we took a look at a rising price channel. Well, horizontal support and resistance is always much stronger than diagonal support and or resistance. Well, in this case here, we've got some very significant resistance. Old resistance should become new support. You've heard me communicate that to you in the past. I'll always communicate that to you because that's how it worked. Well, we saw, and when you break above an area of resistance, you actually like to see it come back, price come back, test it, and prove to you that it's a support level. And what light sweet crude did not do when it broke that $14 trading range, it never came back and tested it. So the question is going to be, is this the time? Now, if light sweet crude actually gets back inside of that consolidation, this entire move out here would have been a false move. And what that sets up over the longer term is actually moving all the way back down to the bottom of the range, which would be back in about the $85-ish level. But you've got to take this one step at a time. We know what the parameters are. They're very easy. You get it close below 102.22 or so, and that says that the trade, the momentum trade, is down to at least the top of the consolidation area, which isn't about the 99-ish dollar range. Let me see here. I would say it's right about 99. We'll just use 99. That is a good price. But then if price gets below that, 95 is your next target, but then really your ultimate target would be about $85 and change out there. And that's with, got light sweet crude backing off. Let me go take a peek in on the King. Let's go see what the U.S. dollar index is doing. That's up at 8 pennies, so not really a huge move or anything out there. So that's on light sweet crude. Let's take a look at silver, see what silver is doing. That's off about 36 pennies right now. In the case of silver, that's just got a nice big bullish engulfing candle. So we're taking a look at the continuous contract out here, and the low of that is $21.22. That is your range. If that area gets busted, then you're going to see silver pull back to about $19.69. That would be the next move down there. That would be the 0.61 retracement. But what we can take a look at on silver is if, in fact, it's able to bust out where the bulls are, what that will do is that will set up an A to B equals CD down. What that pattern is going to look like, you'd come off the swing point high, August 28th. The low is going to be the support level that it would hold. That would be the September 18th low, 21.22. And your C point on this is the trading session of September 19th. You've got a 1-to-1 A to B equals CD. That would take it to 1953. But more likely what will happen is you would get down to about 1842. That'll actually get you down to test the 1818-ish range from June 28th. And that would likely be the next buy. But first, the bears have got to break the back of the bulls, and the bulls are hanging out at that price level of $21.22 out there. So that's Goldilocks, silver, light sweet crude. Let's take a look at bonds as long as we're over in this section of my charts out here. And bonds, they gave us the buy signal on this trading session right here, which was on September 17th, before Uncle Ben actually came out. You wonder, I got a number of buy signals in the marketplace before the Fed came out with a number of different tools. Now, I didn't take those trades because, on days like I was ready to take a trade. I was looking for the market to punch down and then bounce up through it. Never did that, so I didn't jump on board, but I did go short the following day out there as price made its highs. In the case of bonds, they actually gave a signal before Uncle Ben came out, and now what we are seeing, and I gave those numbers out to you, the 130.02 level, close above that, said that bonds are ready to move up, and then where they're going to move up to is at least they're going to try to break into that consolidation range as well. Remember, just like we took a look at light sweet crude, we can flip this here, and if bonds can actually get up inside that area, above the 135 area, that sets up a run all the way back up to the top out there. But one thing at a time. Let's go out to Orlando, to Rich. Rich, thanks for calling. Thanks for holding. How are you today?
Good, Steve. How about yourself?
Excellent. Thanks so much for asking. You wanted to take a look at ERY. Is that the...
That's the bear. That's the, looking for...
So last time we spoke, you were on the bullish side of the... that's the energy sector?
Right. You got it.
Okay. How did you stay with that trade? What did you end up doing on that trade?
No, I ended up actually not doing that terribly well.
Oh, I am sorry to hear that.
Yeah.
Very sorry to hear that. All right, so let's go take a look at let's take a look at the energy. Now, are you in this trade? You're looking to get in this trade?
Actually, I'm in this one at 25.50. Okay. So it went down, but it wasn't too terribly bad. Now it's kind of coming back, and it's a real question. Really, is this just a pullback, or is this maybe kind of the beginning of a correction? I mean, I guess ExxonMobil is the biggest piece. It looks like it's kind of coming down. The other big pieces are kind of holding up, like Chevron and Oxy. They seem to be holding up much better.
Right. Well, if we take a look at it, so from the bearish side of what you're looking at, the good side here is we take a look at the energy sector. It's back into the lower part of the range, meaning below the May 22nd high out there at 83.95. So that's on the positive side for you, and you want to see the XLE stay below that level. If it stays below that level, then I would answer your question that this is more of a correction versus just a retracement. As soon as you would see price get back above that, then what this likely would turn out to be would in fact just be a pullback and would be a correction working off an overbought level, because that's really what it has done so far. September 18th, the market moved into overbought condition, and what we can see here is with the pullback over the last 3 days here, it just simply has been working off an overbought condition out there. So that's one of the things that I would be paying attention to is in fact the price level of 83.95 out there. If you get back above that, then you might want to retake a look at the trade. Now, with regard to today's activity, and maybe go a little bit more in depth on, is this more of a correction or what is this? Let me try to pull up my parameters here real quickly. There we go. So the number that you want to, I'll write this down on a pad of paper. The number you want to be paying attention to at today's close is 968. If there is net declining issues of 968 or more, and if the VIX index is above the 50-day, stay with the trade because it's more likely a correction that's underway.
Appreciate that. Thanks so much.
Hey, no problem. Thanks so much for calling, Rich. We'll be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Dow's off 14 right now. S&P is down 2. When we began the show, I was taking a look at the pre-market out there, and, you know, if the universe doesn't just simply deliver a gift to you, we had Red Hat, still the leader in the clubhouse on the way down, off about 11.5%, down $6. And I mentioned that it was Red Hat and a couple other stocks that actually were the momentum that I needed to say, you know what? My trading system was absolutely not perfect just yet. And when the question was, what was it that I could do about it? I mentioned it was 2006, so I just went ahead and pulled up the Red Hat chart, and we'll go back to 2006. I can show you the exact times that this happened inside Red Hat. Now, the first downdraft here, I don't think this was the one that really necessarily shook me up. This one down here was down with 23 million shares. The night before, it had closed out at about 25 dollars and a penny. The next day it was trading out at $23.40. Not that I like to take that kind of a hit, but it was really right here. The stock had made its way all the way back up. Now back then I would look at a chart. I couldn't tell you what the heck it meant. It was so much foreign matter out there. The reality is there is so much information. This is truly the power. This is the business This is the business opportunity of a lifetime, is really understanding the technical trading patterns that are out there and then running it like a business. There is no better business, in my opinion. It is a matter of having the diligence to push through. But once you do, the light bulbs go off, and it is a beautiful thing out there. And what a great thing to be able, what a legacy to be able to pass down to your kids and friends and family, to be able to truly teach them about money and how it works. But take a look at Red Hat here. The trading session, September 26, 2006, closes at $26.32. So, Stevie's son went to bed feeling okay about that position. And, of course, the very next morning, wake up, and it trades down to as low as $19.82. It didn't stop there. But at 19.8, that was a big hit. Now, that wasn't a 50% hit, but it was 26 to down to 19. What is that? A 30% hit, 35% hit out there inside a Red Hat. Of course, it didn't stop there. I can't recall when I actually exited that trade. I have to really go back and take a look at all my statements out there. But take a look at what Red Hat finally did. It did it again, closed at October 25th at about 19.50. Next trading session got down to a low of 13.70 out there. So it was Red Hat that was one of the culprits. I can't remember off the top of my head the other ones there were about. All it took was 3 times. The first time was like, okay, and the second time was something to think about. And the third time was massive action. And massive action just happened to be, I was headed to a golf tournament. My business partner was in the car in front of me, called me and said, turn on this radio station. You got to listen to this guy, Tom O'Brien. And that was it. And right from there, I remember speaking to Mike Comey, saying, Mike, I don't understand anything about technical trading, but I know I need it. I know that this is what I want to do. So I'd like to attend, but if I attend, am I going to interrupt the class? Because if I'm going to pay, it was thousands of dollars back then. If I'm going to pay that kind of money, if I've got questions I want to go ahead and ask, and you know what, he said, yeah, no problem at all. And sure enough, and that started the whole relationship, and it started my immersion into technical trading. Now, the cool thing about the Master Trader course that's coming up this Friday is I only wish that I could have taken the course that I'm going to go ahead and be teaching out there, because the quickest way, the fastest way, folks, to immersion, the fastest way to compress decades into days, well, that's really what I'm going to be sharing with you. It's by modeling others, and that's what I've done. And now I've taken, by modeling others, Larry, Tom, Steve Nissen, Tony Robbins. I've taken all their work and put it together all in one, and it's exactly what you need to know. All the details on the homepage of TFNN.com. Hope to see you there, folks. Have a great Tuesday. Look forward to seeing you in a few or tomorrow morning. Take care, folks.
It's always better when we're together. Yeah, it's always better when we're together.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online Master Trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.